Hey, what's going on, guys? Just want to give a quick update on Fubo. Pretty interesting day today, actually. Not much happened in the first two-thirds of the day, but Fubo was kind of trending down, and then obviously the big Fed announcement came out around 2 p.m. And so that just kind of sent it skyrocketing. They were down below 310 and then shot up into the 340s range. This is pretty interesting actually because the Fed announcement, obviously, if you heard and kind of looked into that, they're essentially holding rates where they're at, and the possibility of I think it was two or three rate cuts that they're looking at for next year. And that's interesting because just how Fubo responded, and the whole market was up after that announcement, but growth stocks especially, and Fubo being one of them, took very well to the news. And that's important because these growth stocks that are not profitable essentially do really well when there's rate cuts or rates are done hiking, and it feels like we're at the top. It really depends on what the economy does and what inflation does. But if we are at the end of the rate hikes, this is really good news for growth stocks. This really means that it's really going to be a major catalyst for stocks like Fubo in the coming year, because it's really how the market responds to it, and clearly it responds well, just showing how it did today after that news. It shot up like 6-7% or something. From the low to the high, I think it was like 11 or 12%. But this is going to look very well for them, because if we have rate cuts, every time that happens, that's really going to be a major catalyst for Fubo. And I think in the last video I talked a bit about more catalysts. This in itself, aside from what Fubo is doing as a business, the rate cuts alone are going to be a pretty solid catalyst, and will really bode well for them. But another thing I was thinking of, I kind of talked about institutional ownership, and I really can't make it clear enough that as they continue to execute on their goals of the 2025 cash flow profitability targets, if they continue to make progress towards that, if we have rate cuts, they're going to do really, really well in 2024. They're sitting at about I think it's $1 billion market cap, just under. But I was doing some quick math on my shitty Excel spreadsheet. Essentially what we're looking at here, there's about 293 million shares outstanding for Fubo. This number is going to increase over time, but it sounds like they're done with the dilution, so it shouldn't be anything crazy. But just doing some basic math here, sitting at the 340, they're about $1 billion market cap. And I just plugged in a couple, these shares are staying the same. They're going to go up a little bit, but it shouldn't be anything significant like they have done in the past couple of years. Really, this is just kind of a look at what their market cap is going to be based off of how many shares and what the share price is at. If my math is correct here, they're going to be about a $2 billion company next year. Based on adding subscribers and increased ARPU. So I'm thinking they'll be about a $2 billion company, maybe a little under, but somewhere around there. So that, if their market cap is sitting right at where their revenue is, that's about a $7 price target. And as they continue, and this all hinges on them being able to execute their goals. But essentially, you can see, as their price increases, there's a multiple there. So, I think the target here is basically like a 5x multiple of their revenue. And, if they're profitable, it'll could get even better than that. But just looking in the near term of the next 1 to 2 years, $7 puts them at a $2 billion market cap. 14 puts them at 4. All the way up to, I just kind of did a couple price points out there, but if they can get that 5x multiplier of their ratio between what their revenue versus market cap is, let's say 2 billion in sales to a $10 billion market cap, that's $35. Obviously that's huge. I think we will get there, but it'll probably take a couple of years. And then that's really just depends on how they can continue to execute, if they have any major catalysts, if they have strategic partnerships in line. I think they, in the next, year or so, I'm shooting for this like 7 to 14 range in the next year or so. But beyond that, the sky's the limit for what they can really accomplish here. So just kind of something to think about. But as they increase their institutional ownership, as they, as the Fed issues rate cuts, I think we'll start to see more of these numbers, because they're just still insanely undervalued. And we saw 2 years ago when they were in the $50-$60 range, they were just way overpriced at that point. There was just it was a lot of hype. But just something to think about as far as where they can go in the near term. And then it's really going to depend on how they can execute on adding subscribers, increasing their ad revenue, things like that. But just wanted to give this quick update. If you have any comments, feel free to leave a comment, like and subscribe. That's a huge help. And as always, this is not financial advice. Thank you for watching.